Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, it's been a while, Professor. Last Friday, stocks on Wall Street ended significantly higher, at least in part, it seems, on the jobs numbers for last month. A gain on the Dow of 1.25%, a little more on the S&P. For the week, though, U.S. stocks were down. What's the story in the global markets as we start a new week?
Right. As you said, the markets for the week as a whole was down. Dow was down 1.4% for the week, and this was after 4 straight weeks of gains. S&P was down 3.35% for the week. NASDAQ was down 5.65% for the week. And it's somewhat surprising that the markets went up on Friday because there was a bad news for the U.S. stock markets, namely the Fed not only raised the interest rate by 75 basis points. That was widely expected. But what was perhaps less widely expected was that they signaled that the terminal rate for interest may go up. Now, what do they mean by that? Well, in September, they published a dot chart, and according to that dot chart, the rates would go up to 4.75% sometime in 2023 and held there until the end of the year. So the wide expectation was that the rates would go up to 4.5% this year, and then another small rise sometime probably early next year, and then the increase would stop. But now the Fed is indicating that perhaps the rates will go up to perhaps 5 to 5.5%. Before the rates start coming down again. And that seemed to have hit the market significantly, which accounts for the losses for the week as a whole. And in some sense, the employment report didn't really help. Now, in one sense, the U.S. economy is doing very well. It gained 261,000 jobs. It's slightly weaker than the rise that we saw in September, but still, compared to normal times, this is a very good job creation number. Wage increase is 4.7%. That's, again, lower than September, where you had 5% wage increase, and lower than inflation, which is 8.2% for the month of October, but it's still significantly higher than the Fed target rate of around 2%. So given that, that was widely seen as one of the reasons why the Fed would raise the rates higher than previously expected. So in that sense, the market should have gone down on Friday as well, but as you mentioned, the market actually went up quite strongly on Friday. The explanation, well, I don't think anyone's really quite sure why, but we are in a very shaky time. The U.S. has a midterm election on November 8th, U.S. time, and for the House of Representatives, the control is expected to shift to Republicans. The Senate, it's not yet clear. One of the biggest reasons why the ruling party may be changed for the House of Representatives is the high inflation. The U.S. CPI numbers are coming out on Thursday, so we need to watch for that as well. We may see some significant changes in stock market once those CPI numbers come out. Dow year-to-date is minus 11.43%. S&P for the year is minus 21.39%. NASDAQ for the year is minus 33.84%. Asian markets, well, they were all up today, and by a very healthy measure. They're probably following the lead from the United States, but if you just look at the numbers, again, it's a bit questionable why the Asian markets went up. China's export numbers came out, but if you look at it from the dollar calculation, exports fell by 0.3% in October compared to October a year ago. That's significantly less than the expectations of around 4.3%. And imports in dollar terms fell by 0.7% compared to last October as well. And this is a slowdown from the September numbers. But the exchange rates do have a significant part. It's confusing the numbers a bit right now because in Chinese yuan terms, exports and imports actually rose by 7% and 6.8% respectively. So depending on whether you look at it from the point of view of yuan, which is closer to how much volume they export, or dollar, which is how much value that they export, you can come up with some different scenarios. And then China signaled that it may be ending its zero COVID policy, which may be making things optimistic despite the bad trade figures. This optimism seems to be reflected in oil prices as well. Oil prices are up to $91.44 from $86.63 last week at October 31st. Gas prices are going up as well. So this may be another double-edged good and bad news. Good news is Chinese economy is recovering. Korean exports may recover as well. The bad news is that this may mean bad news for global inflation. The European markets, they were all up on Friday. FTSE is up today. The other markets haven't opened yet. But United Kingdom had a very high rise in interest rate, 75 basis points, following the European Central Bank increase last week.
Well, here in Korea, stocks were up today, too, with the exchange rate coming down significantly. We saw buying by foreigners and institutions, big gains for car makers Hyundai and Kia, Chipmakers Samsung and SK hynix also doing well. Tell us about the domestic market, Professor.
Okay, well, for the week, for last week, Kospi rose by 3.53%, Kosdaq by 0.91%, and Korean won appreciated by 0.74%. Today, Kospi was up 0.99%, ended today at 2,371.71. Individuals sold, institutions and foreigners bought. And the rise in Kospi seems to be following the U.S. market as well with the other Asian markets. It may also signal the optimism from the Chinese signal that they will be ending the zero COVID policy. Kosdaq was up 0.95%, ended 700.47. Individuals and institutions sold and foreigners bought. As you mentioned, Korean won depreciated quite a bit today. It depreciated by 1.65% and ended at $1,403.50 per won. Year to date, Kospi is down 20.6%. Kosdaq is down 32.5%. And Korean won is depreciated by 18.04%. But the bit of a good news here is that if you just look at the last month, Korean won actually appreciated by 1.5%.
Well, it seems like uncertainty continues to grow in the economy globally, much of it coming from the war in Ukraine. You mentioned the U.S. elections coming up on Tuesday. We also have CPI you mentioned. Here in Korea this month, we have some new data coming out. What's on your radar, Professor, in the week ahead?
Okay, well, the September's balance of payments will be coming out on Tuesday, but I think the major factor already pretty much known. The current account is likely to be slightly positive because the trade deficit wasn't that bad on September. But once we get to October's balance of payments, there may be a fairly good chance that it'll be current account will be negative again. Tuesday, we also have third quarter manufactured goods, domestic supply figures coming out. And on Wednesday, this is probably the most important number this week. The October employment report will be coming out. On Thursday, we have third quarter service production and consumption figures coming out. And globally, the most important figure will be, as you mentioned, on Thursday, the U.S. CPI numbers are coming out, and that'll give us an indication on where the Fed is headed with interest rates.
All right, Professor, we'll have to leave it there for today and check in with you again later in the week. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you.